Have you ever entered a trade on a breakout only to watch price immediately reverse and hit your stop loss? That's the classic fake out. And it's how institutions take money from retail traders every single day. But today, I'll show you how to spot fake outs versus real breakouts, so you stop handing over your money to institutions and start trading with the smart money. Most traders see price breaking a support or resistance level and instantly enter. No patience, no confirmation. And guess what? More than half of those breakouts are false, engineered to trap traders. Institutional traders know exactly where your stop losses are. They know retail traders place stops just below support or above resistance. So they push price just far enough to trigger those stops, collect the liquidity, then reverse direction. You're not losing to the market, you're losing to smarter money. But here's the good news. Real breakouts have specific characteristics that fake outs don't. And once you know what to look for, you'll never fall for these traps again. I'm going to show you 5 key indicators that separate real breakouts from institutional head fakes. First, volume. Real breakouts happen with significant volume increases. Why? Because it takes genuine buying or selling pressure to break through established levels. Fakeouts often happen on low volume because institutions only need a small push to trigger stops. Second, watch for the retest. Real breakouts often pull back to test the broken level as new support or resistance. This isn't a failure, it's confirmation. The level holds and price continues in the breakout direction. In fakeouts, they blow through the level, then immediately reverse without any retest. The institutions got their liquidity, and they're done. Third, timing matters. Fakeouts often happen during low liquidity periods, early morning, lunchtime, or right before major news. Real breakouts typically occur during high-volume sessions when institutional players are most active. Also consider the bigger picture. Is this breakout aligned with the overall trend? Counter-trend breakouts have a much higher failure rate. Fourth, look at how price approaches the level. Real breakouts often show a pattern of higher lows on an upside break or lower highs on a downside break. Fifth, check multiple timeframes. A breakout on the 15-minute chart means nothing if the daily chart shows strong resistance above. Real breakouts align across timeframes. Now, all these strategies depend on having accurate, real-time market data and reliable execution. That's why our team has extensively researched and tested dozens of brokers to find the ones that actually deliver institutional-grade data and execution. Visit BrokerCheck at link below to see our top-rated brokers that won't cost you money through slippage or bad fills. All right, now let's put this all together with a simple trading strategy. Here's how to trade this. When you see a potential breakout, don't chase. Wait for 2 things, strong volume and a pullback to test the broken level. If the test holds, that's your entry signal. Place your stop loss just beyond where the test failed. Simple as that. Never risk more than 1 to 2% of your account on any single breakout trade. Even with perfect analysis, some real breakouts fail. But when you're right, real breakouts can give you 3 to 1, 5 to 1, even 10 to 1 risk-reward ratios. That's how you build long-term profitability. Avoid these deadly mistakes. First, trading during lunch hours or pre-market when volume is thin. Second, fighting the daily trend. If the daily chart shows resistance above, don't take that 15-minute breakout. Third, chasing breakouts after they've already moved 20 to 30 pips. Patience pays. Wait for the next clean setup. Remember, trading is about patience and probability, not excitement and hope. Institutions use fakeouts to transfer money from impatient traders to disciplined ones. By waiting for volume, watching for retests, and considering context, you put yourself on the right side of these moves. Start applying these rules to your next trades and watch your win rate improve dramatically. If this helped you avoid even one fakeout, it was worth it. But there's more to smart money tactics than just breakouts. Subscribe and I'll show you how institutions manipulate the markets.